Hi, my name is David Wells. I'm the CFO and COO for Truth in Equity. I'm going to tell you a little bit about credit line banking and what we've been doing for the past 15 years, helping out thousands of clients all over the country. First of all, and this may not mean much to you, it does to me, we have a A+ BBB rating. We have a 5-star Trustpilot rating. At our website, you can communicate directly with many of our customers. We provision for emailing and communicating to them because we like to hear them tell their story and to help you understand why this is important and how it can work for you. I'm going to go through a quick formula here. Credit line banking is about setting up a credit line for yourself that you can bank out of rather than using checking and savings. Because in checking and savings, money just sits there idle when it should be working for you. We don't all pay our bills every day of the month. We choose a few days to carve out, sit down, either move money from left to right, write checks, however you do it. That time that money sits there idle is not helping you. So let me give you a quick formula as to why this works and how we've helped out thousands of people, which you can find out more at truthinequity.com by plugging in your numbers and testing this formula for you. Credit line banking allows you to bank within yourself and get more out of what you own and what you earn, so that idle money during the course of that month is working hard for you. And here's how that works. A $200,000 balance with a surplus of $2,000. How did I get that? You take home $6,000. You spend $4,000 to service your debt, cell phone, electric, water, etc. You have a $2,000 surplus. In that 30-day period, it may fluctuate, go up, down. That money idle is what is holding you back. Put it to work for you. $200,000 balance, $2,000 average surplus equals 100 months. Balance divided by surplus divided by 12 equals payoff in years. So this 100 months divided by 12 is 8.33 years. Now, how do we do that? We help you set up the right HELOC, which is a home equity line of credit, either in first or second lien position. I prefer second lien because it doesn't expose your entire debt load to a variable interest rate. And then we'll explain that on our call if we choose to have one. Or a PLOC, which is a personal line of credit. Many of our Texas clients and people who don't have good loan to values or are not quite in a position to refinance their home or get a second will start out with a PLOC and then graduate to a second or first lien position. Now, the mathematics, balance divided by surplus divided by 12 equals payoff in years, works 100% of the time. It's simple math. How will it work for you? Go to truthinequity.com, put in your numbers, get an immediate result, and then get us on the phone so we can explain it to you. truthinequity.com, balance divided by surplus divided by 12, payoff in years. 15 years in business, thousands of clients who you can talk to. Appreciate your time.